Students, good afternoon.
Good afternoon, madam.
I have sent you the pictures, Nana. Once go through them. Those all are the different approaches which we are going to learn. You can expect a question from the approaches. A theory question is compulsory from the 4 different types of approaches in the capital structure.
Ma'am,
Yes, Nana.
will you explain all the approaches now or shall we only go through it?
Just once go through, give a rough idea about each and everything. I'll start. Still, I am uploading some more pictures. After that, I'll
Ma'am,
start.
can you
By then, you
tell
just
once regarding
go through.
traditional approach? Let's put some
What?
diagrams and traditional approach.
What should I do?
Can you give a brief explanation about it?
Arey, I will explain everything, Nana. First, you go through it. I'll explain. Now, now. Yesterday, we have done certain problems. I hope people got the homework problem. Did you do it? And did you get the homework problem? Yes.
For some option 2 and 3, I got different answer, ma'am.
How much did you get? This is option 2 is regarding
15% loan.
15% loan. So on 60 crores, if you do 15%, how much did you get?
4 crores 50 lakhs.
None from okay, once I'll check up. And how much did you get for what is the third option? Preference dividend, how much did you get?
EPS, ma'am, or interest?
Preference dividend. For the third option, you need to calculate preference dividend after the EAT.
Yes, ma'am.
No, no. Did you do it? 12%.
Ma'am, that 12% should be calculated on which amount?
On 60 crores amount.
On 60 crores. Okay, ma'am. Ma'am, but then in the first problem, the last one was this preference share one, and we have calculated not on the the invested amount, but on the 10 lakhs which was mentioned in the option, the last option.
10 lakhs means what, Nana? It was the capital only which they were raised using the preference. That's the reason we have calculated on 10 lakhs. Here, the entire 60 crores is raised by preference shares. So, on entire 60 crores, we need to calculate the 12%.
Oh, okay, ma'am.
So, we will be getting 7.20. Like if you have taken in crores amount, did you all get 720 lakhs?
Yes, ma'am.
Yes, ma'am.
Yeah, then you will be getting the correct answer, no, Nana? 6.50 you didn't get. For the last option, EPS. And for interest also, you will be getting 9 lakhs. Why people are saying 7 lakhs they got? How 7
Ma'am,
lakhs?
yes, ma'am. 6 lakhs into 15%. No, ma'am. 9 lakhs we are getting.
6 lakhs, Nana.
60.
60 lakhs. 60 lakhs.
60 crores, we will be getting 9 lakhs only. Then how come you are missing the question, missing the answer? Once again, you do it and let me know. You will be getting interest 9 lakhs and your preference dividend 720 lakhs. If you didn't get, you let me know. Okay. Again, solve the problem. You will be getting it.
Okay, ma'am.
Okay. Now, by the 2 questions, what we have done yesterday, is that clear for you? In this chapter, we are going to calculate the proportion. That is how much proportion of equity should be there, how much proportion of preference should be there, or debt should be raised, so that whatever capital we are raising, that whatever capitals, different sources we are using, that combination, that raising of that combination, that is a cost should be at minimum and value of the firm should be maximized. On these both criteria itself, we have worked out yesterday 3 problems. Do you agree with me? Did we see the composition or the proportion of which like equity plus dividend is equity plus preference is better, or equity plus preference plus dividend is better? Okay, that combination only we have seen, and we have also gave a decision where the EPS is maximum. Yes or no?
Yes, ma'am.
So the capital structure will be deciding that kind of proportion. So whatever written material I have given, this is what I have written in that. Okay. And this kind of like this capital structure is different and financial structure is a different. Okay. Now financial structure, if we want to come to know regarding the organization, if we look into our balance sheet, what will be the different items under the liability side? What are the different items under the company's balance sheet? This I have explained even in the first class of FM.
On liability sides, we have capital, creditors,
bills payable, bank OD, and long-term and short-term, this one, raising of funds and
Debentures.
debentures. Very good. So these all will be there in the balance sheet side. So this all constitute for the financial structure. But in the capital structure, we are bothered only about equity share capital, preference, and debentures, which are long term in nature. Okay, now you tell me, financial structure is a bigger term or capital structure is a bigger term? Which is which is a wider concept? Financial structure or capital structure?
Capital structure.
financial.
Financial structure is the bigger term because it includes all the liability side items of the balance sheet. But capital structure will be including only those things which are of long-term nature, okay, especially the equity, preference, and debentures. It is bothered only about these three things. So that's why financial structure is the wider concept because it will be including the capital structure in it. Agree with my point? That is, financial structure means entire side of the liability side of balance sheet will be taken into consideration. Understood this point?
Yes, ma'am.
Yes, ma'am.
Now, any kind of decisions which is related to the firm, that is maximization of value of the firm, okay, that is wealth maximization concept and all. Now, financial structure is not related, especially the capital structure is the one which is going to determine or which is going to act as the best determinants in the evaluating the value of the firm. That is the reason we are learning different theories, different assumptions, okay, and we have been calculated the different proportions yesterday and all these things. So capital structure is one of the major determinants in the value of the firm, in knowing the value of the firm, okay, and it includes only long term but not short term. Next, and it should be like a different financial planning will be done, and it will be including estimation of capital to be raised and all, and it will also will be telling from where and which resources the funds should be raised, okay, and sorry, which resources, not which sources the fund should be raised, and what is the proportion of the amount which should be raised to through these three different things, okay, and it will be helping to determining the different policies, and it will be helping to manage the financial plan, like whether equity dividend should be paid or not, if at all they need to pay, at what percent, like that is dividend payout ratio should be 100% or any other percent should be there. By doing so, like certain amount they can keep aside retained earnings, and furtherly if at all they want to increase the growth of the organization or expand the organization, in that case these retained earnings will again be used by the organization and they will be start reaping the profits, okay. So uh, that kind of decisions also will be answered in the financial planning, and they must be issuing the preference dividend, preference shares or debentures or not. These all things will be taken into consideration when we talk about this capital structure and all. And when determining the particular capital structure, here certain things should be considered. Now, what is that which will be telling us this is the capital structure which the organization should follow? Okay, now what are the two consideration means? Whatever the cost is there, Nana, that the cost is nothing but overall cost of capital we will be telling, or we can also say, did you hear the word WACC in the other classes, in the earlier classes from my mouth? WACC. Did we do problems on it? What it is? Did I explain you? WACC.
Weighted average.
Cost of capital. Now this weighted average cost of capital is nothing but it is the overall capital of the firm. It is overall cost of capital of the firm. Okay. Now you tell me, whenever it comes to cost aspect, you think that the cost should be more or less?
Less.
Less. So this capital structure, when we are determining that this is the proportion of debt should be there, this proportion of equity should be there, or this much amount of preference should be raised, when determining the optimum capital structure or a particular capital structure, then they need to consider that whatever cost or overall cost is there, that is WACC is there, that should be at a minimum. Now, value of the firm should be maximum or it should be minimum? Value.
Maximum.
Maximum. So these two are only the different, these two are the main objectives of this capital structure. One is WACC should be minimum, that is overall capital, that is KO. We can tell this WACC as KO also. Okay. And the value of the firm should be maximum. So based on these two objectives only, our capital structure is taken into considerations. Okay. So for this, different thinkers until like how scientists will be there in that manner regarding the FM and all thinkers, we will be telling them. So different thinkers gave different perspectives. Okay. They also have given certain assumptions for each theory. Now, what are assumptions? Any idea? Assumptions, any idea? What are assumptions? Any idea to like anyone know what is assumptions? What are assumptions?
Conditions.
Conditions, okay. You think assumptions are the realistic or they're not realistic?
Not realistic.
Very good. Assumptions are the one which are not realistic. That is, they might be not applicable in the present life, or in a realistic manner, they might be not applicable. But still, thinkers gave certain assumptions, okay, which are not able to realize just for the provence of their theories. Now, whatever theories we are going to learn, those theories are purely based upon certain assumptions. Okay, so which are not applicable to real life, but just for the purpose of provence of their theory, they have taken certain assumptions. Now, all the assumptions we are going to learn at a stretch, and some assumptions might be used by one thinker, some assumptions by another thinker. Okay, but all the assumption at one stretch, I want you all to make it clear. Clear with this up to here? Capital structure means what you need to remember? E is to P is to D. That is the proportionate we are going to think. And two objectives you need to remember. WACC minimization and value maximization. Only on these two objectives, your total capital structure theories will be working out. Am I clear? Nana, you can expect a question on theory also regarding this the theories. Okay? And problem also you can expect sometimes. Am I clear up to here? Let us go into assumptions part.
Yes.
Now look into the like if you can follow the notes which I have sent, you follow it. Otherwise, just to listen to the class, it's enough. After the class, you can just browse. Okay. Now, what are the different sources in the capital structure? 3 or only 2?
3.
3. But here they have taken an assumption that there are only two sources of capital. There are only two sources, that is debt and equity. Preference is not there. That is the assumption which the thinker has taken place. But in real, we also know that even preference share capital also exists as a source, as one of the source of raising the funds. Clear with the first assumption?
Yes, ma'am.
Only two sources, debt and equity. Next. Now, is there any kind of tax called income tax? We have calculated the statement. In that, did we taken into consideration the income tax? Did we have?
Yes,
Yes.
Yes,
Next.
ma'am.
Yes. Now, when I calculated the cost of capital, Nana, did I told you something called transaction cost or brokerage or flotation costs and all?
Yes, ma'am.
Yes. But here the thinker is of the view that there is no income tax. Okay. No transaction cost. None of this transaction cost will be especially met when the equity shares are sold and purchased. That is, shares are sold and purchased. Then this transaction cost will be taken into consideration. And flotation and all, this brokerage, or when they are issuing some kind of prospectus and all, such type of cost will be should be paid. Okay. So there is an assumption taken by the thinker that there is no income tax, okay, or no transaction cost or no flotation cost. But in the real life, when we are calculating the cost of capital, did we take these all into considerations?
Yes, ma'am.
But it is a completely opposite. He is telling that it is not there. Okay, hold it. Second assumption is clear.
yes, ma'am.
Next. When I told you the dividend payout ratio, Nana, I told you that certain amount will be kept aside by the company, like certain amount of profit, whatever they are earning, a certain amount will be kept aside. Did I say this or not?
Yes,
Yes,
ma'am.
ma'am.
But there is an opposite assumption. There is an opposite to it. That is, here the thinkers are saying that, like, they are taking an assumption that there is no retained earnings concept at all. Whatever profits they are earning, 100% dividend payout ratio is there. That means whatever profit they are raising, come on, let's pay everything which is their balance. That is, after deducting the tax, whatever. No, on EBIT, the amount will be paid to equity shareholders, or on EAT, EBIT or EAT.
Yeah.
Everyone agree with EAT concept?
Yes, ma'am.
Now, if there are no retained earnings, it means that total EAT, whatever is there in the organization, that will be paid out to the equity shareholders. But in real life, that will not happen. In practical, there are retained earnings. Every company will be always doing certain amount, that 100% payout will not be there. Only certain percent will be payout. Okay. Now, next concept is, now the life of the company will be going concern, or it is only a, like, it is not going concern.
Going concern.
Going concern. But in a real life, will that going concern will be possible?
No.
Like, just take an example, Nana. Suppose, uh, like, if such a, this is an important assumption. If such assumption is not taken, okay, and the business might be closing up. Once the, like, when the person is doing the business, suddenly he might be occurring losses, and he might be reaching a position to just close down the business. It might be happen within 1 month of start, or 2 months of start, or at a future point at a future point of time. Okay, if such assumption of going concern was not taken, then it is obvious that the amounts, the maintenance of the book, of the accounting records will not be possible, because he think that however the company is going to shut down, and the start of it also cannot be happen. Okay, because there is no role of accountancy. Okay, and because in the future, however the company will be closing down, he will not even start that company. Yes or no? You agree with this point?
Yes, ma'am.
Am I clear on that point, that assumption?
Yes, ma'am.
Now, next assumption. So this assumption is assumption number 5 in your book. Okay, next. One more, this is important. Now, we have learned the in the cost of capital, that whatever your KD is there. What is KD? That is not movie name. What is KD?
Cost of debentures.
Cost of debentures. Now you all tell me, cost of debenture is more or cost of debenture is less? Cost of debentures are more or cost of equity is more?
Equity is more.
Equity is more. We have discussed it also, like why it is less also we have discussed. Yes or no? What is the main advantage of raising the funds from debentures? I have told you that. That circle diagram I have given you. I have explained you.
Yes, ma'am.
Profit, tax, some concept I told you. Okay. Now you can ask me a question, madam. However, this cost of debenture is less than the cost of equity. Already you have told me that. Why you have given is given under the assumption. Does anyone got this doubt? It is a fact only, no, madam. Why are you giving such assumption under the, like, again, why are you giving such assumption? Did anyone receive any kind of doubt like this?
Yes, ma'am.
Yeah. Now listen properly. I told you cost of debenture will be less. Okay. When I told you when there is a tax element in it. Okay. But in the second assumption, whatever I have told you, does there any income tax in the question? In the assumption?
No income tax, ma'am.
If no income tax means, it is obvious that even debt will be more. Agree with my point?
Yes, ma'am.
That is the reason I have written this KD is less than E as a assumption, because it should not be contradictory to whatever second assumption I have taken. Again, I am writing this is also as an assumption. People are clear with this point?
Yes, ma'am.
Yeah. Now you tell me, in the hierarchy of payment, who will be paying the first, debentures, preference, or equity? We have seen yes, debentures. Next, if at all preference are there, preference. And the last will be the equity shareholders. Okay. So even for that reason also, we need to assume KD will be less than KE. Okay. Fine. Now the KD, whatever payment we are doing, it is a fixed or some kind of changings will be there every year.
Fixed.
Okay. So that is the reason we have taken the different things. Now, I told you some third assumption, that there will be no retained earnings. Did I say this concept, Nana?
Yes, ma'am.
There will be no retained earnings means it is 100% that the equity shareholders will be getting the share of profits whenever there are profits.
Yes, ma'am.
Now, is there any kind of risk associated with them?
Yes.
I'm telling risk when it will come, when there are high chances of not getting the money. Now, these high chances of not getting the money will be there when they are going to retain certain amount of profit. But here I'm telling there is no such thing, that they're not they're not suppressing certain amount or not keeping away some amount separately. Okay. So because of that point, since there is no scope for keeping the retained earnings, so in that case, there is no risk of income in case of equity shares. Agree with it?
Yes, ma'am.
So that is the that is a further continuation of the assumption. Now, the next assumption is that whenever we are going to take certain capital structure decisions and all, we need to see that whatever capital we are going to raise, that will be remaining constant. Okay, that will be remaining constant. In the picture, can you see the thing which I have sent you? Sixth assumption, Anna. It is not clear, but still, sixth assumption. Is it possible for you to see?
Ma'am, I think you missed the page, ma'am. Till third assumption it is there, then net income approach is there.
Achha, one picture is missing. Okay, one second. Second. Mm-hmm. One second. I will check. Now, did you receive, Nana?
Yes, ma'am.
Yes. Now, listen here. Go to the last sixth assumption. I wrote you the cap. I have written that total capital will remain constant. Okay. That's the reason whatever funds we are raising, like in the yesterday's problem, 60 crores is the same amount for all the different alternatives. Okay. And we are also going to take an assumption that now, since the capital is remaining constant, okay, the rate of return also will be constant. Okay, these are the two assumptions. That is, since the capital will be remaining, the total capital which should be raised to different funds or different sources, it will be remaining constant, and even the rate of return also will be constant. Okay, so I have given you in the example that debt will be like, first the debt element is 40 lakhs and equity is 20 lakhs. Okay, what is the total capital raised?
60 lakhs.
This is my first case. Okay, and I am taking a return on 10%. Okay, I am just writing I am taking an assumption of 10% rate of return. Okay, so how much did I get? 6 lakhs. So this is nothing my operating profit or EBIT. Agree with this up to here?
Yes, ma'am.
Yes. Now I am taking the next thing, that I am increasing my debt element from 40 lakh to 50 lakh. But what is the assumption I am taking? What should be constant?
Total capital is constant.
Total means 60 lakh should be constant. So what is the balance figure I am going to raise from equity share capital?
10 lakhs.
10 lakhs.
Agree with my point? Now, when I am supposed to calculate the operating profit, now will I calculate on 60 lakh or some other amount?
60 lakhs.
60 lakhs. Everyone agree with it? Yes or no?
Yes, ma'am.
Yeah. So if I take an assumption that my capital will be remaining constant, obviously my rate of return also will be remaining constant, and whatever profit I am getting, that will be the same amount. Yes or no?
Yes, ma'am.
So EBT will be remaining constant. Agree with this? Sorry, EBIT will be constant. Agree with this point?
Yes, ma'am.
So that is only my next assumption. See the second assumption. Because of the sixth assumption, that is capital remaining constant and where rate of return also remaining constant, my EBT or EBIT also will be remaining constant. Okay? Understood this point?
Yes, ma'am.
I know certain people are getting confused. Madam, you are increasing the debenture element and all, but still your rate of return is not affecting. Nana, make it a point. Our rate of return will not be calculated on the individual part. We are going to calculate on the overall capital. But if I increase this debt element, the tax will be taken into consideration. That's it. Okay. So because of the sixth assumption, we came to know that even our EBIT also will be remaining constant. Okay.
Yes, ma'am.
Yes. Next is that the value of the firm, whatever is there, Nana, we need to calculate in this manner. That is EBIT, whatever profit we are earning or whatever operating profit is there, that one we want to divide it by overall cost of capital. Nana KO ante overall cost of capital into 100. This is nothing but the capitalizing antamannata. The value of the firm will be calculated in which manner? EBIT divided by KO into 100. Am I clear? Nana, this KO is nothing but the overall cost of capital. These are the different assumptions. In addition to that, in certain approach, we need to take another assumption also. In addition to these assumptions, that in that particular approach, I'll let you know. Understood up to here or any doubts? All the 8 assumptions, whatever we have learned just now, is it clear or people are facing any kind of difficulties?
Clear, ma'am.
Okay. Next. I will be giving you some 5 minutes of time quickly just to browse the assumptions part. Fast. It will be fine. 5 minutes I'll be giving. It is 1:55 up to 2. You need to learn these assumptions. At least go through these assumptions. Am I clear?
Yes, ma'am.
Shall do it fast.
Ma'am,
Yes, Nishit.
ma'am, can you explain fourth assumption again?
Fourth assumption.
Cost of
KD
debt
is yeah. Now you tell me cost of debt will be less than cost of equity or it will be more.
more than equity.
Huh? Cost of debt is equal to less because we have some kind of considerations for tax. Okay. So
Okay.
that is the reason actually this statement of cost of debt less than cost of equity is a fact. Always raising the funds through debt is a less. Okay. Like the cost what we are going to incur will be less. We also know that. But I have given you this as an assumption comparing this point with the second assumption because there I told you that there will be no income tax or there will be no flotation cost and all. Now, if income tax is not there, now the cost of debt will not be cheapest mode for raising the capital, okay, or raising the funds. Because that assumption is there over here, again I'm taking this assumptions. Otherwise, this would not be an assumption. This would have been a fact. Understood this point?
Yes, ma'am.
Okay, chalo. People are ready with the assumptions?
Ma'am, can you explain the eighth one? Value of what
No,
exactly?
no, that is in actually a formula. When we learn the approaches, we will be coming to know. Now, EBIT, whatever we have calculated, that will be taken into consideration, and it is a meaning that here individual cost we are not going to taken into consideration. We will be taking into consideration the overall cost of capital. Okay, like we have done all the three things, no, Nana. Like we have taken into consideration the debentures, the cost of equity and all. So here independently we are not going to calculate the cost. The combination or overall cost will be taken into consideration, and that will be determining the value of the firm. Am I clear? When we do the problems, you'll come to know. Okay. Am I clear? Individual source of praising is not considered. Here, the combination of all the things is considered. That is my assumption.
Yes, ma'am, got it.
Oh, okay. So these are the different assumptions. Okay, based on these assumptions and some two, three more assumptions, the theories will be there, Nana. So there are there are four theories of capital structure. Okay, net income approach, net operating income approach, traditional approach, and Miller approach, Modigliani and Miller approach. Okay, Modigliani and Miller approach. Nana, try to remember in this sequence only. If you remember in this sequence only, you can understand the how each theory came into existence. Okay, like some limitations were there, then they have found out one more and then one more and one more like that. Okay, so this net income approach is the first approach. Okay, so this is given by the thinker David Durand. Okay, net income approach is given by Durand, D-U-R-A-N-D, David, D-A-V-I-D, David, D-U-R-A-N-D. In fact, both net income and net operating approach, both were given by this David Durand. You can note it. I will be giving you for internals this question. Okay. So who gave the net income approach? David
Durand.
Okay. D-U-R-A-N-D. Okay. Now, there is an additional assumption which is taken purely for this particular net income approach, that is KD and KE. What is KE? Cost of debentures and cost of equity will be remain constant at whatever level, that is at every level of debt equity mix, your cost of equity and cost of debentures will be remaining equal. This is what the assumption, additional assumptions, in addition to those 8 things, the net income approach, the thinker David has taken. What is that? Whatever KD, that is cost of dividend, is there and cost of equity is there, those both will be remaining constant at whatever legs. Like suppose firstly you have taken some 70 lakhs and 30 lakhs, 70 lakhs as debt and 30 lakhs as equity. At that particular level, if you calculate, the KD and KE will be remaining constant. Okay, or if you increase the debt from 70 to 100 and equity you are going to decrease, still they are going to show you the equal, like whatever percentages are there, they are going to show you the same constant. Okay, now if you look into the table, the diagram which I have sent you, like did I send you the textbook picture for net income approach?
Yes, ma'am.
Yeah, please look into that, Nana. Look into that. Now, our first assumption, not first, our fourth assumption was what? KD will be less than KE. Yes or no?
Yes, ma'am.
Now, did you are there with the graph part, that is diagram part?
Yes, ma'am.
Now, there are there are x-axis and y-axis, or there is an horizontal and vertical lines. Okay, towards the left side of the graph, towards the vertical side here, the things related to cost of capital will be taken into consideration in all the 4 approaches. Agree? In all the 4 approaches, whatever is there related to the cost of capital, those things will be taken into consideration. And towards the right hand side, whatever you are having the line, there the degree of leverage will be taken. Degree of leverage ante whatever this debt and equity mix is there or proportion is there, regarding that you are going to mark it in the left hand side. Okay.
Yes, ma'am.
Now, my assumption is KD will be equal to, like it will be less than KE. So my lines, whatever I'm drawing, whatever the lines are there, cost of capital and cost of debt, now which should be up and which should be down? Now KD, he is telling it should be less. So that is the reason I am drawing KD the lower side, if you observe. Now KD is in the lower line or upper line?
Lower line.
Lower. Then KE is upper?
Yes, ma'am.
Yes. Now, that's why I have drawn the lines like this. And madam, why did you not draw a straight line? That might be some people asking, some question might be raising, why you have drawn straight line? I have drawn straight line because I have taken an assumption that whatever my left hand side, the proportion is increasing or decreasing, still my cost line is going to maintain a constant. This assumption did I have taken? Do I take? Had I take or not? That is the reason I am drawing straight lines. Since I have taken an assumption that whatever my left hand side, that is proportionates, are increasing, still my cost will be maintaining constant. That's why I have drawn the straight lines. Clear up to here?
Yes, ma'am.
Now, next, look into the picture which I have sent to you, like some example I have given you in the written format. Can you open that net income approach picture I have given you?
Yes, ma'am.
Yeah. Now, don't read the above part. Come down towards the left side. Did I give you some kind of example?
Yes, ma'am.
There I have written something called debt, equity and all.
Yes, ma'am.
Now, listen that example correctly. If you understood that example, your net income approach is done. Now, debentures, I have given 40 lakhs and equity shares, I have given 60 lakhs. Okay. So this is my proportionate mix regarding the debt and equity. Clear with this?
Yes, ma'am.
Now, whatever I am adding, like 40 and 60, what is that I am getting answer?
100 lakhs.
Now, what this 100 lakhs is called as? Total capital?
Yes, ma'am.
Now, you require something called cost of debt. Percentages you require.
Yes, ma'am.
So that's the reason I am giving you the debt percentage is 15% and the equity percentage is 20%. And accordingly calculate and write down. That is on 40 lakhs, if we do 15%, we will be getting 6 lakhs. Okay. And the cost for equity is 20%. So accordingly, we will be getting 12%. 12 lakhs. Now, we will be considering the individual cost or overall cost.
Overall cost.
Overall cost. Overall cost means KO. It is nothing but WACC. But here we are not assigning any kind of weights and all. Directly we are taking overall cost of capital is equal to this 18 lakhs. Okay. The cost, when we are calculating the overall cost of capital, how we will be getting whatever amount we have got by raising through different funds, that divided by total cost. We will be doing that only. Nana WACC calculate చేసినప్పుడు we have after calculating the total of the cost, whatever we have done, that will be the denominator, and whatever the individual costs are there, that summation will be on the numerator. Accept with it.
Yes, ma'am.
Yes, ma'am.
The same thing now also we need to do. I told you here overall cost of capital KO will be considering. That's the reason in the next step I have written cost divided by total capital. Now cost means total cost. How much did you get? If you add both 12 and 6.
18 lakhs.
18 lakhs. Now what is the total cost of capital? Total capital
100 lakhs.
So into 100% if I do, what is my KO? 18%.
Yes, ma'am.
Everyone followed up to here.
Yes, ma'am.
So based on the assumption of number 8, where I need to take care regarding the overall capital, I am calculating the KO over here by cost divided by total capital, and I have calculated now KO. Okay, fine. Now, still the answer is not completed. Like the net income approach is not completed. I will be explaining something more here. Listen now. Now I have taken this debt as 40, no, Nana, that you increase it to 70. Increase it to 70. Now, what do my total capital change or remain constant?
Constant.
Which assumption is that? Assumption number 6 I have taken.
Yes.
Now, will the percentages changes? That is 15% and 20%, whatever we need to do, does those change? KD and KE? Does KE and KD changes?
No, ma'am.
No. Why they won't change?
We took additional assumption that it's constant.
Okay, fine, understood. Now you calculate on 70 lakhs the percentage of 15 and 30 lakhs the percentage of 20. Can you tell me the amounts? Can you tell me the amounts? Yes, people are doing it. So 70 lakhs into 15%, did you get 10.5 lakh?
Yes,
ma'am.
ma'am.
Yes, ma'am.
And
Yes,
30
ma'am.
lakhs, 64 lakhs? Sorry, 6.4 lakh. I have missed a point over there. How much did you get? 0.64 you got. Sorry, it is only 6 lakhs. Huh?
6 lakhs only, ma'am.
In the diagram, I have kept something else, Nana. Try to write it as 6 lakhs only in the diagram, in the picture which I have sent. So total, what is the thing? 16.5 lakh. That is the total cost.
Yes, ma'am.
Now, we need to do the KO calculation. What is KO? Overall cost of capital is equal to cost of each one divided by total of each cost divided by the capital raised into 100. So 16.5 lakh divided by 100 lakh into 100.
%16.5.
Now, everyone cleared up to there? You are on that point? Everyone?
Yes, ma'am.
Now you tell me, in the earlier point, how much I got?
18%.
Earlier when it was 18%. Now how much I got?
16.5%.
Now you tell me, if I increase my debt, does my overall cost is decreasing?
Yes, ma'am.
Yes. So now due to the increase in the amount of debt, my KO will be decreasing. Because debt, we all know that it is the cheaper source of finance. Okay. And also we have assumed that particular assumption, that is KD is less than KE. So on both the things it works out. And therefore, the value of the firm is maximized or not. Since the cost is less, it is obviously that the value will be more.
Yes, ma'am.
So that is what I have written in that particular box. Like that is, if at all there is an increase in the proportion of debt element or in the amount of debt, it is obvious that whatever KO you are getting, that it is going to decrease. Am I clear? Up to here, still it is not completed. Still we need to learn something more in this. Up to here, clear?
Yes, ma'am.
Now, you tell me once again, when I will be increasing the amount of debt, okay, my KO will be increasing or decreasing?
Decrease.
Fine. Clear, people, up to there. Very good. So this is the conclusion, that the value of the firm will be increased. One second, one more thing. Okay. Now, what is the ultimate conclusion we will be taking? We will be like, we have come to know that the net income approach says that if at all you're going to increase the amount of debt, okay, the amount of debt, the overall capital, the overall cost, that is KO, okay, will be reducing, and ultimately the value of the firm will be increasing. Any doubts or people are clear? People are clear up to here?
Yes, ma'am.
Yes. Now look into the diagram, Nana. Some line you are seeing that it is falling down. Yes or no? Are you observing that in the textbook it is falling down? Now understood why it is falling down? Because the debt element they are increasing, and towards the right hand side the debt portion is being increasing. That's the reason your cost of capital is coming down. Am I clear this net income approach? Once again, let me explain. Shall I explain once again the gist?
Yes, ma'am.
Yeah, listen here. Now, in addition to whatever assumptions we have taken, the additional assumption we need to take or we need to consider in the net income approach is that the KD and KE will be remaining constant at whatever level the debt equity mix will be there. This is the additional assumption. And based on the fourth assumptions, we will be drawing the two parallel lines. That with a combination of the additional, I have drawn the two parallel lines. Okay. That is KD will be at a lower point and KE will be at a upper point. And we have certain things calculated, and with that we have come to know that if at all the proportion of KD is going to increase, okay, if at all the amount or proportion of the cost or the debentures amount is going to be increased, the portion of debenture amount is going to increase, we have come to know that the cost of capital, okay, the overall cost of capital, that is KO, will be decreasing. And it is obvious that if KO, the cost of the overall cost of capital is reducing or decreasing, means ultimately the value of the firm starts increasing. Okay, so net income approach means what you need to remember, the value of the firm increases. That's it. Clear or any doubts with the net income approach? Now look into the formula, Nana. Look into the formula. There they have written the fourth line, earnings available to equity shareholders divided by equity capitalization rate, something they are giving. Did you see all those things? Nana, equity capitalization rate means they are going to give you the cost of capitalization, equity cost of capitalization, or they'll be saying that the rate of equity capitalization of the company or the cost of equity capital. So they are going to give you that rate, and accordingly you will be applying in the formula and you will be coming to know the answer. Okay, clear with this approach or any doubts? Now V is equal to S plus D. V means what? The total market value of the firm. S means the market value of equity shares. Okay. And earnings divided by equity capitalization. Then the D is equal to market value of debt. And EBIT by V we are going to do. That is the overall cost or weighted average cost of capital can be calculated as KE is equal to EBIT divided by V. So if we do certain problems, the answer, like the formulas and all will be, you will be coming to know. But what the ultimately, which point you understood now? If it is a net operating income, net operating approach, what is the thing you need to remember? Value of the firm increases, constant or decreases?
Increases.
That's it. Okay, now now the Durand has landed up he has concluded the net income approach, but there were certain limitations and all. Later on, net operating income approach, this also found has brought to us by the David Durand only. Okay, this theory is also suggested by Durand only. Okay, and this is another effect of leverage. Okay, on the value of the firm, it is some kind of additional things to the net operating approach. Okay, and certain things he is telling us, like according to this approach, that if there is a change in the capital structure of the company, but still it does not affect the value of the firm, and also the overall cost of capital also remains constant, by if at all people are following such type of approach. Now he's telling this. Why he's telling, we will be I will be explaining you clearly. Okay, I will be explaining you clearly regarding why he is telling this point. Now, listen here. Now, which and which remains constant? KD and none of people followed with net operating approach. So net income approach.
Yes, ma'am.
No. So next is net operating approach. This is also given by Durand. Okay. Now, how many of you think that whatever the debt is there, the amount of, yeah, any problem? Yes, any problem? Ravi? Mute yourself, Ravi. Still people are facing any doubts in net operating approach? Sorry, net income approach. Shall I continue? Hello.
Yes, ma'am.
No.
Next, net operating approach we are going to taken into consideration. Okay. Now, how many of you think that whatever amount we are raising through debt, if at all it is increasing, the equity shareholders will be not impacted, or nothing will be happen to them, or they will be not raising any opposition or any kind of things to the organization? How many of you believe that? With the increase in the debt, with the increase in the amount of debt, how many of you feel that the equity shareholders are not at all impacted?
They are
They will be
impacted.
How they are impacted? Any idea how they are impacted?
their wealth increases.
Very good, very good. Because if there is an high amount of debentures, tax reduction will be there. Okay, so profits, there are high chances of increase in the profits. And since there is an high increase in the profits, the equity shareholders try to demand more with the organization. Okay, and when there is a debt element into the capital structure, the risk of the equity shareholders also will be increasing, and because of that only they will be trying to demand the higher amount of return. Okay, due to the increase in the debt element. Okay. Now what this net operating approach will be saying that if at all there is any increasing in the debt element, even the KE will not remain constant, but it also starts increasing. Am I clear? The KE in the earlier one we have taken as the assumption KD and KE will be constant. But here in the net operating approach, it is not KE which is going to remain constant, but it is KO which is going to remain constant, and KE will be increasing with the level of debenture amount increasing. Clear with the point? Clear with the point?
Ma'am, why will cost of equity increase, ma'am? Debt should increase, right?
Because people will be demanding more amount from the organization.
Got it, ma'am.
And we also know that whenever the debentures amount is increasing, we came to know in the earlier example that if the debentures are increasing, it is ultimately the overall cost of capital is decreasing. This point we have come to know. Yes or no?
Yes, ma'am.
And with this and in this KD and KO is going to remain constant, but not KE. This is the additional assumption of net operating approach. Make it a point. In the book, I forgot to write KO. I just write KD and some dash remains. I thought of asking you and then writing. I have left like that only. So change. So just fill up that KD and KO is going to remain constant here. Okay. And here with every increase in the debenture amount, they also demand, that is the equity shareholders demand an increase in their amount also. Okay. So due to increase in the amount of debentures, they also think that their risk is also more, and they think they should also get more amount from the firm. Okay. So these are the two things, that is KO will be, we know that with the increase in the debentures, KO will be decreasing, and one more thing that KE will be increasing. These 2 points are clear.
Yes, ma'am.
Now you tell me, KO decreasing means it is a favorable thing to the organization or it is an unfavorable thing to the organization? Overall cost favorable, everyone agree with it. Since the overall cost of capital is decreasing, the meaning it is a favorable point to the organization. Everyone agree with this point? Yes or no? Everyone agree with this point?
Yes, ma'am.
Nana, cost అనేది తగ్గినప్పుడు, is it a favor to the organization or not favor to the organization?
Favor.
Favor. Now I am also telling one more thing, that if cost of debentures increase, ultimately the cost of equity also increases, because here I have not taken an assumption of constant. Okay, now it is increasing. Now is it a favorable or unfavorable situation? I'm asking you, if my cost of equity is increasing, now cost is increasing, it is a favorable and unfavorable?
Unfavorable.
So I have two things in the net operating approach. Okay, net operating approach, I have two things. One is my overall cost is decreasing, but in addition to that, even my cost of capital, that is equity share capital, is increasing. No doubt there is one favorable situation and one unfavorable situation. It is that whatever favorableness I am getting, okay, and whatever unfavorableness I am getting, this unfavorableness will be set off from whatever favorable thing I am getting. Am I clear? So this favorable would be set off by the unfavorable thing. That means you think there is any benefit out of such a thing? Now you take an example. Suppose I am getting, since the cost of capital is reducing, I am able to save some 10 rupees. Okay, just take an example. And because of the increasing in the debentures, I am also like my cost of equity also raising to 10 rupees. Now, will there be any benefit out of this approach for me?
No, ma'am.
Oh.
So 10 rupees profit and 10 rupees loss, whatever is there, that will be set off. So there is no benefit or there is no gain to the firm. Okay. Because KO is ready, because here KO is constant. That is the assumption we have taken. KO is going to remain constant. So if KO will be remaining constant, it is obvious that even the value of the firm also will be remaining constant. Clear with the point? So what you need to remember here, value of the firm is equal to constant. In the first one, value of the firm is going to increase. In the second instance, regarding the net operating approach, here the value of the firm remains constant. Clear? Why it is constant means setting off will be taking place. The offset will be there. Understood?
Ma'am, so in net income approach, only K is constant.
KE and KD is constant over there. Net operating approach, KD and KO is constant. అందుకే ఆ two lines, if you see KD and KO కి రాసాను in the textbook, if you see it is KO and KD, the lines are, the straight lines are. అవునా కదా? KE KO కే కదా నాన్న ఉంది lines. హలో, Nana, everyone open the textbook and see that net operating income approach. Net operating income approach.
Yes, ma'am.
NOI అంటాం మనం. ఓకేనా? Now, is the parallel lines దేనికి డ్రా చేసాం మనం? KO and KD only. The straight lines.
Yes, ma'am.
Because I am taking the assumption that these both are only constant, but not KE. Here, since with the increase in the debt proportion, ante with the increase in the left hand side of down, if you see the degree of leverage, with that increase in the proportion of debt, my KE is increasing. Andike in KE I have written up. Okay, but if we take this the first point where this KE and KE is starting from KO nana, a point lo matram KO, that is value of the firm, will be equal to the KE in that point, or your overall cost of capital will be equal to KE. But since it is raising, then here it will not be equal to KE. Okay, so because of that only we are learning this approach, that is offsetting approach, we call this as. Am I clear with this point? I'll give you 2 minutes. Please go through fast. Go through the two approaches and let me know any kind of difficulties people are following. And after finishing, you need to, I will ask you certain questions, you need to answer. Fast, did the revision?
Ma'am, so in net
Yes, ma'am.
income approach, the equity shareholders are silent.
Yeah, there I have taken as equal to no, no, no. They will be equal. I told you KD and KE will be equal. That assumption I have taken over there. So andukane the equity shareholders does not speak out anything. But it is wrong. That's the reason they have developed the other approach. Am I clear? Hello. People are ready. I'm going to ask you a few questions. People are going to answer.
Yes, ma'am.
Now, in net income approach, does K is constant?
Yes.
NOI approach, KD is constant.
Yes.
Yes, ma'am.
Yes, ma'am.
Now KE will be constant in KE will be constant in NI or NOI.
NI.
NI.
NI. So in NOI, it is going to change. Now, in K, if you talk about the overall cost of capital, KO, where it will be changing?
NI.
N.
Okay, understood. Now, value of the firm will be constant where?
In
NOI.
NOI.
Clear? Clear with this point? Nana, write it in your book. Write it. These
Yes,
points
ma'am.
are like if you will learn these points or if you come to know these points, your approaches will be clear. You quickly make two tables like NI and NOI. NI, NOI. Roughly, you write down Nana. NI, NOI, and you write down in the first column like KD, KD, KE, KO, and KF. Sorry, VF. VF means what? And
Value
write
of
down
the
in
firm.
NI against KD point, constant, and NOI, you write down constant. KE, next write down KE, NI, you write down constant, NOI, change. NOI, change. Next, KO, KO, and in the NI column, you write down change. KO, in the NI column, you write down change. And in NOI, write down constant. Write down constant. Next, VF, value of the firm. In the NI column, write down change. In the NI column, write down change. In the NOI column, write down constant. In the NOI column, write down constant. Clear, Nana? Understood NI and NOI?
Yes, ma'am.
Now, look into problem number 5, everyone. Answer problems. Did I send to you?
No, ma'am.
No, ma'am.
Questions I have not sent.
No, ma'am.
I guess yesterday. Wait, let me see. Nana, yesterday some student has sent. I guess.
Yesterday it is there, ma'am.
That. In that only problem number 5 you see, Nana. Kavya, I guess. Kavya or Grishma send it. So in that, can you open 5th problem? Nana, these all are whatever theory I told you, I have explained you, it is regarding the written things in the exam. Okay, but if we know the formula, we can do the problems. Not a big task in that. Okay, that theory, whatever I have explained, it is like in the exams you should not feel some kind of difficulty. So I have explained you. Okay, now look into problem number 5 fast. Ready with the 5th question?
Yes, ma'am.
Now, a company is expecting this 5th question is 2 parts, Nana. So the first part we are doing, a company is expecting an annual earnings before interest and tax. This is EBIT. Can I take?
Yes, ma'am.
How much? 5 lakhs. Okay, fine. The company in its capital structure has 12% debentures. Okay, the debenture, the capital structure mix, he's telling 12% debentures of worth 15 lakhs is given. The cost of equity or capitalization rate. Did I told something about capitalization rate some 2-3
Yes,
minutes
ma'am.
before? No. That is given as 16%. Okay, good. You are required to calculate the value of the firm and also overall cost of capital according to which approach he is telling? Net income approach is telling. So first one or second?
First.
First.
First one. So if we look into the formula of the first one, what are the different things we require? We require EBIT.
Yes.
Okay, fine. That is given directly. We want also the value of the firm. Okay, that we need to find out. Okay, quickly, that we need to find out. B, hold it. Let us do first one, A bit, and let us do the B bit in the again. Okay, now calculation of, write down the heading, calculation of value of the firm. Calculation of value of the firm. Nana, in this format only, whatever I will tell you now, in the same thing you need to do for all the problems which this NI is having. Okay, like that only you need to do. Okay, calculation of value of the firm is written.
Yes, ma'am.
Now write down annual earning, that EBIT you write down. EBIT, how much is given?
5 lakhs.
5 lakhs, write down. Acha, you need to draw 2 columns. Did I say particulars and amount column? In the particulars column, you need to write earnings before interest and tax. That is EBIT. And in the amount column, try to like 5 lakhs. Try to write 5 lakhs. Now from EBIT, what is the first element we need to remove?
Interest.
Interest on whom? Interest on debentures. What is the figure they are giving? What is the debentures amount?
15 lakhs.
What is the rate of interest they are imposing?
12%.
So do accordingly. Less interest on debentures, in the bracket write down 15 lakhs into 12%. And let me know what is that you got.
One lakh 80,000.
So if you deduct this interest from EBIT, Nana, what is that you're going to get?
3,20,000.
3,20,000. What is that called as?
EBT.
EBT. Now tell me, is this EBT or EAT? Think on all the assumptions and tell me. Generally, it is EBT, and we are going to deduct the tax.
VAT.
But I told you here there is no tax. Yes or no?
Yes, ma'am.
Tax ledante, what is this called as EAT only?
Yes, ma'am.
So write down against the 3,20,000 figure, you write down earnings available to equity shareholders. Earnings available to equity shareholders. Okay, next. Did they give you something called equity capitalization rate?
Yes, ma'am.
Person, ma'am.
Write down equity capitalization rate in the particulars column and write down 16. Done up to there?
Yes, ma'am.
Now, next line you write down. Market value of equity. Market value of firm G. Market value of equity. None of this equity in the textbook, they have represented the market value of equity as S. Okay, let us also take the same thing.
Ma'am, is yes not a standard letter?
Yes, Nana?
Is yes not a standard letter for market value of equity?
It is the value of equity, the market value of equity.
It is not a standard letter, ma'am. I mean, you told I've given in textbook, right?
I mean to say the representation of this market value of equity is given as SI, told you.
Okay.
The alphabet is representing that, I'm telling. People are ready up to there?
Yes, ma'am.
1 second, I'll send you the picture. I have done this now. People are done up to there? నేను అక్కడ వరకు చేశారా? ఏమైనా డౌట్స్ ఉన్నాయా? I have uploaded the picture, see.
No doubts, ma'am.
Up to capitalization rate is completed. Now, next line I have asked you to write the market value of the equity, that is S. Now, generally, how we will be doing the EPS calculation? Available to divided by number of shares. Okay, here they have given a concept called capitalization rate. Now, EAT divided by that capitalization rate, we need to take it into consideration. Okay, and tell me, how much did you get the S value?
20 lakh.
Everyone, Nana 20 lakhs వచ్చిందా?
Yes, ma'am.
Now, is this enough or we want something more?
We need enough, ma'am.
We need to calculate the overall cost of capital. So if we want to calculate the market value of the firm, overall market value of the firm, so we want even debentures amount also. So do we need to do any kind of adjustments for debenture or directly the amount is given?
Correctly, the amount is given.
So write down down to this S, Nana, write down to this S, write down market value of debentures in the bracket, write D. Market value of debentures in the bracket, write D, and in the amount column, write 15 lakhs. Now, if we add these two things, can I say that market value of the firm will be achieved by the organization? Do we achieve the market value of the firm if we add these both things?
Yes, ma'am.
So S plus D is equal to how much?
$35 lakhs.
35 lakhs. Now, next, we need to calculate the overall cost of capital. Okay, that is KO is equal to EBIT by V.
Ma'am, after S plus
Some students asked me what is the value assumption number 8 to madam. Some student asked me, I told you I will tell you at the time of exam, at the time of problems. No, that is nothing but V is equal to EBIT by KO. So take KO over there and bring towards the denominator the V. Yes or no? Madam, someone asked me what is that assumption number 8. Now we are going to use that only here. Am I clear? There V, that is VF is equal to EBIT divided by KO I have written. Now bring the KO towards the left side and bring that thing downwards, the value of the firm. Clear with the point?
Yes, ma'am.
Now, EBIT, how much he is giving? EBIT ఎంత ఇచ్చాడు నా ఫస్ట్
5
5 lakhs
lakhs.
ఇచ్చాడు.
5 lakhs, ma'am.
Good. Now next.
Ma'am, after S plus D, what we should write?
S plus D అక్కడ 35 lakhs వచ్చేసింది కదా. నెక్స్ట్ లో రాయండి calculation of overall cost of capital. Calculation of overall cost of capital. లేదా డైరెక్ట్ గా ఇది రాసేసి డైరెక్ట్ గా ఇఫ్ యు ఆర్ గెటింగ్ కన్ఫ్యూజ్డ్ యూ కెన్ రైట్ విఎఫ్ ఇస్ ఈక్వల్ టు ఈబిఐటి డివైడెడ్ బై కేఓ. సో కేఓని ఇక్కడ తీసుకెళ్ళి ఆ పర్టికులర్ స్టోరీ ఆల్సో యూ కెన్ షో. ఓకే, ఆర్ ఇఫ్ యూ థింక్ దట్ యు ఆర్ ఫర్గెటింగ్ ద థింగ్స్ లైక్ ఇట్లా డైరెక్ట్ గా వేయడానికి రాకపోయినా యూ ట్రై టు రిమెంబర్ ద assumption అండ్ రైట్ ద సేమ్ థింగ్ హియర్. People are clear? Hello. People are
Yeah.
clear with the Chalo. Write down overall cost of capital. KO is equal to earnings divided by earnings or EBIT. Earnings or EBIT divided by value of the firm. Divided by value of the firm. Try to substitute. Hello. 5 lakhs divided by 35 lakhs into 100. How much did you get?
14.28.
Everyone got the same thing, 14.28%.
Yes.
Now there is something homework for you. Listen properly. Nana, same in this manner only. We need to do one more time the problem. Bit. Here I have taken the debentures of 15 lakhs only, right? In the first one, did we take the debentures worth only 15 lakhs?
Yes, ma'am.
So here in the second point in the B bit, he is telling that additional things, or the company is raising 10 more lakhs of debentures. So for 15 lakhs, you need to add this 10 lakhs. So whenever you are calculating the interest, Nana, you need to take as 25 lakhs. And whenever you are calculating the market value of debentures, you need to add 25 lakhs over there. Am I clear? Instead of 15, you need to take 25 and do the sum again. Will you be able to do?
Yes, ma'am.
So do it and come to the class tomorrow. And let's check out any other problem is there for net.
Ma'am, we should take 10 lakhs in place of 15 lakhs.
10 lakhs not, you need to add. He is telling
Add 10
raise
lakhs to the
further.
15 lakhs.
So 25 lakhs you will get, right?
Okay, ma'am.
Okay. Do that and come to the class tomorrow. And meanwhile, please prepare the theory questions also. Okay. Chalo, see you all in the next class then.
Ma'am,
Yes, Nana.
ma'am, is there any information regarding internals of SEM 1?
I guess SEM 1 internals are being conducted, I guess.
No.
No, ma'am.
No, ma'am.
6 semesters internals are conducted online last month only.
We didn't conduct you internals. I too don't remember, Nana. And there is no information. If any information, I'll inform you for sure. Okay.
Okay, ma'am. Thank you.
And they also released only 6th SEM this one timetable. So we don't know. We didn't receive any kind of schedule for you. If even that is also known to me, I'll be the first one to inform you. Okay.
Okay, ma'am. Thank you.
Because if you will not allow me to take the class. Yes or no, you will not be allowing me to take the class once this thing is issued. Okay. Chalo, then see you all in the next class, Nana. Be prepared for the next class and come.
Yes, ma'am.
Thank you, ma'am.